Hey guys, welcome back. In this video, we will continue with the financial market topmost MCQs. Okay, so in our previous video, we discussed so many questions based on financial market, capital market, and money market. I hope you watched that particular one. If not, please go and watch that video. And now we will continue with the financial market. So question based on capital, money, or their instruments, right? So next, first question on your screen is, in which kind of funds investor can enter or exit throughout the year at the market NAV or net asset value, which is the current market price for any mutual fund. Okay, so guys, if you see that mutual fund wala video where we discuss different type of mutual funds. So this is based on open-ended mutual fund. Okay, so we have two major categories. One is open-ended, where investor they can enter in any mutual fund at any specific time. So that is called open-ended, and in case of close-ended, we have a fixed lock-in period. And if you talk about the other one, like equity funds, where basically fund manager invest their entire money in equities, shares, and debt funds, where he invests entire money or entire portfolio is generally based on debt securities. Hybrid is basically we can say a combination of equity and debt. Like in Indian market, we use 60s to 40 ratio, 50s to 50 ratio, 70s to 30 ratio. So that depend on the risk of that particular portfolio. Okay, so open-ended mutual funds are those funds where investor they can enter anytime or they can exit anytime at the current NAV of that particular mutual fund. Okay, next question. Does fund invest money into fixed income securities such as corporate bond, government securities, and treasury bills? So what will be your correct answer? So what will be your right answer? Debt funds. So debt funds, the type of mutual fund where basically fund manager they invest entire money into the fixed income securities, or we can say bonds. Okay, so in case of equity funds, they invest entire money in equities. In case of debt, they invest entire money into bonds. And in case of interval or hybrid, so this is a type where they generally make some combination of equity and debt as well. Hybrid and interval are same. Okay, and close-ended and open-ended. Close-ended where we have a fixed lock-in period, but in case of open-ended, so investor they can enter or they can exit anytime at the market NAV. Okay, so hope this is also clear. Next one, with reference to mutual fund, NAV stand for, so many times we discuss about NAV. So NAV stand for net asset value. Okay, so this is, you can also say this is the current market price of any mutual fund. Okay, like whenever you will invest any mutual fund or whenever you will do some research about mutual fund, so the market price of that particular mutual fund is generally known as net asset value, and the formula is very simple. It is the total fund minus liabilities divided by number of outstanding units. So on the basis of this formula, we generally calculate the current market price or the current NAV of any mutual fund. Like let's say in case of shares, when you invest in shares, so this is like we have current market price. Like let's say SBI is trading on 330 rupees. So 330 is current market price of State Bank of India. So similarly in mutual fund, that current market price is generally known as NAV, and the formula is total fund minus liabilities divided by number of outstanding units. Okay, next one. When the issuer of the bond call out his right to redeem the bond even before reach the maturity period, so it is generally known as, so optionability of bonds I already discussed in our previous video, even in the fundamental video as well. So we have two optionability in the bond. So one is callable. The right is reserved to the issuer of bond, so they can call out that particular bond before maturity. Let's say any issuer, let's say Government of India, they issue bond for 15 years and they call out these particular bonds in 10 years. So that is generally known as callable of bonds. And putable, the right is reserved to the investor or the buyer of that particular bond. It is not an obligation, so they can, let's say you invested in some bond for 10 years, you withdraw your money in 7 year only. So that is option putability of that particular bond. Okay, so option C will be right answer for this particular one. And optionability of bond is call option, that right reserved to the issuer of bond, but it is not an obligation. In case of putable bond, it is the right is reserved to the buyer of that particular bond. Okay, but these are like they do have that option of prematurity, but it is not an obligation. Okay, next one. Under the dash market, funds are traded for a period between 2 days to 14 days. So what it is called? So what will be your correct answer? Notice money. Okay, so call money, notice money, term money, these are interbank transaction. So buyer and sellers or the participants in this particular markets are the banks. Okay, so when any bank need funds for overnight or 24 hours, that is called money. If there is an interbank transaction between two banks for overnight, that is called call money. Notice money is 2 to 14 days, and 15 to 364 days or less than 1 year, it is generally known as term money. Okay, so option B will be correct answer for this particular one. Next one, what is the minimum denomination of CDs, certificate of deposit? So certificate of deposit are issued by banks and financial institutions. Okay, and these are generally issued in a denomination of rupees 1 lakh and multiple. So option C is the correct answer. So in case of CD, it is 1 lakh. In case of treasury bill, it is 25,000, and in case of the certificate the commercial paper, it is rupees 5 lakh. And if you talk about the risk and return, so certificate of deposit, they belongs to moderate risk and return. Highly risky instrument are commercial paper, and least risky instrument of money market is treasury bills. Okay, next one, minimum denomination of commercial paper. So what will be a correct answer? 5 lakh rupees. We just talk about this particular one. So option D is the correct answer for this one. Okay, commercial paper are issued by corporate houses or any company which is registered under Companies Act 1956. Okay, next question, guys. What is the minimum time duration of commercial paper? Okay, so as you know, the denomination is 5 lakh rupees issued by corporate houses, and these are generally issued for a minimum period of 15 days and maximum up to 1 year. So 15 days will be correct answer. CDs are issued for a minimum time duration of 7 days, and in case of treasury bills, they have a fixed denomination time duration like 91 days, 182 days, and 364 days. Previously, 14 days was also available, right? So these are issued for a time duration of minimum 15 days and up to 1 year. Next one, when the interest rate is zero and the issuer is only applicable to repay the principal amount to the investor. So in this type of, like, these are generally known of which kind of bonds? So what will be a correct answer? Zero coupon bond. So zero coupon bond basically, if you see, they are generally sell at par value. Okay, so here basically if you invest 90 rupee, you will get 100 rupees. This is mentioned. Okay, so any specific coupon rate is not mentioned on these kind of bonds, but you will get some return when you invest in these kind of bond as well. Okay, so fixed rate is where the rate of interest is fixed. Variable or floating is where the interest rate is generally float or vary as per the market condition or demand and supply factors. Callable and putable are the optionability of bonds, which we earlier discussed. Okay, next one. Which of the following market is known for the listing of securities? Okay, so capital market is further classified into two parts. One is primary, another one is secondary. So primary is generally known for listing or the introduction of securities, right? And secondary market is generally known for trading. So trading means buying and selling of securities. So what will be your correct answer? Primary market will be correct answer for this particular one. Rest, if you talk about money market, it is the market where companies and government, they fulfill their short-term requirements. Commodities, where we generally deal in raw commodities like gold, silver, lead, zinc, crude oil, even some agriculture commodities as well, like guar gum, turmeric, coriander. So that is commodities market. Currencies, where we generally deal in currency pair. Okay, so we generally have forex market. Primary and secondary, I hope you remember the differences between these two. Okay, so capital market further categorization is primary market and secondary market. Which of the following is not a money market instrument? Okay, so we've gone through so many money market and capital market instrument. I hope now it is clear. Okay, so treasury bill is part of money market, commercial paper is part of money market, mutual funds are not part of money market, these are part of capital market. So money mutual fund is basically a combination of equity and debt, and equity means shares and debt means bond. So their debt bond market and share market, they are related with the this long term securities, and they are part of capital market. Certificate of deposit again part of money market, and dated government securities are again part of money market. So option C will be correct answer for this particular one. Next one, which of the following is our function of Indian financial market? So whenever you talk about financial market, there are so many functions which are generally performed by this particular market. So go through these particular statement. It provide facilitate or it facilitate for the interaction between investor and borrower, which is correct one. It provide pricing information resulting from the interaction between buyer and seller. So with the help of foreign market, financial market, you can know the price of any commodity, any shares or currency. It provides security to dealing in financial assets, like we have exchanges, stock exchanges or broking houses. These like we have SEBI, so we do have security, right? So what will be a correct answer? Option D will be right answer for this particular one. Next one, OTC stand for what? Okay, so OTC is over the counter trade. Okay, so nowadays we have exchange most probably. In case of forex we use this one. Okay, or swaps we use OTC, or forward contract we use OTC, but it is some previously when we do not have this organized market, in most of cases we trade in OTC manner. So over the counter. So what will be a correct answer? Option A will be correct answer for this one. So over the counter or off exchange trading is done directly between two parties without the supervision of exchange. Okay. So as I gave you an example of forward or swap contract, so these are generally part of OTC. Next one. Okay. So guys, I did a video on fiscal policy or the union budget as well. So the topmost MCQs based on fiscal policy or budget, which is frequently asked in examination. So please do watch that one also. Okay. So I hope you guys enjoy this MCQ based series. So like before coming to the MCQ, one request to all of you guys, please do watch the fundamental video or the concept video based on these particular topic. I did videos on financial market, capital market, money market, bonds, types of bonds, derivatives, type of derivatives, mutual funds, types of mutual funds. So these videos are very important. If you'll go through these particular videos, I can guarantee you can mark 100% right answer for all these questions. Okay, so if you like the video, please do share with your friends, and if you are new to my channel, please do subscribe. So I'll see you with more videos, and stay tuned for the upcoming one. Thank you for the watching this video, guys. Have a nice day.